This is an absolute game changer. BlackRock is now filing an application to settle their Bitcoin ETFs in kind in the future. This means that the Bitcoin ETFs will become even more attractive in the future. This means that there will be even more buyers. This means that the Bitcoin price will rise even further. Let's take a look at what this is all about. Additionally, there are current rumors that MicroStrategy, or rather, Michael Saylor now has to sell Bitcoin because there are tax issues with MicroStrategy. Right now, there's a lot of pushback from Wall Street. We'll also take a look at what's behind it. Bitcoin ETFs. BlackRocks have surged, boosting Bitcoin prices. Bitcoin ETFs were cash settled. Since the introduction of Bitcoin ETFs, the Bitcoin price has obviously skyrocketed. And now we have something really explosive here, because until now, Bitcoin ETFs have always been settled in cash. You always had to use fiat to buy or sell Bitcoin ETFs. Bitcoin ETFs used fiat. BlackRock seeks in-kind ETF. You had to do it just through fiat money. And now there's actually the application from BlackRock that they want to essentially launch an in-kind ETF or switch the ETF over to an in-kind ETF. And that would mean that in the future, when you sell Bitcoin in the Bitcoin ETF, you can directly withdraw the Bitcoin to your hardware wallet. And that makes the whole thing so much more attractive. That in the future, when you sell Bitcoin in the Bitcoin ETF, you can directly withdraw the Bitcoin to your hardware wallet. And that makes the whole thing so much more attractive. That has a ton of advantages. Now let's take a look at what advantages all of this brings. For some of you who aren't really deep into Bitcoin, you might be thinking, okay, this is just a regulatory issue. But no, it's so much more. To really make you understand the extent of this, I'm going to read you a comment here from American Hodl on this. He says, "Fuck dude, so much fucking shit is happening right fucking now. I don't think I need to translate that into German. But he's basically saying, it's insane what's happening right now. How things are really building up one after another here. We've now seen that Donald Trump is really opening up to Bitcoin here in the U.S. And this is the direct answer to that. Because basically, the SEC has just slammed the brakes on things here. And now we see the regulatory authority in the US slamming the brakes. Now we see that there is regulatory clarity. And now we also see the application here from BlackRock. Because BlackRock now knows exactly, okay, the chances of the application for in-kind ETFs getting approved are very high. Very high. That probability was, a few weeks ago, it was much lower. And the application's only coming now. Additionally, we're also seeing that right now, there are a ton of altcoin ETFs being applied for, whether it's Ripple, Solana, whatever, all these altcoin ETFs, they're all being applied for now. Because the SEC is really loosening up the regulations. And then it is very likely that an in-kind ETF will come here. I should mention that the in-kind ETF isn't here yet. But when this in-kind ETF comes, like I said, then we'll have the next big shockwave here. That's hitting Bitcoin. There's now an official announcement about it and the official sheet for it. And now you really have to be careful here, because there's an extra clause here. So it sounds super bullish at first, but it also means that this will only be possible for authorized participants, institutions. In other words, institutions can redeem their shares for actual Bitcoin and not for cash. If this gets approved, and what we need now, investors buy Bitcoin ETFs, the in-kind option isn't possible. No idea, a few €1,000. Buying Bitcoin ETFs, then this in-kind option isn't possible here. This only works for bigger players like asset managers, pension funds, and so on. If they buy Bitcoin ETFs, then they can settle it directly in Bitcoin. And in the end, that's still the case. Crazy. Because at least we have the big leverage effects here with Bitcoin. That if, for example, pension funds, or if, for instance, sovereign wealth funds, there are now inquiries at BlackRock where people have asked if you can invest in Bitcoin ETFs here. When sovereign wealth funds invest, it can be like that. And there were inquiries, and they probably reacted to that in the end. Because if you're a big state here, a big nation, the better it is, the more flexibility you have and the more options you have here, of course, with the Bitcoin ETFs. And if you can go directly into self-custody, it's even better. Cool. So you have to picture it like this. If a big state, for example, let's just assume, China probably wouldn't buy BlackRock ETFs, but they would go for a different option. But let's say China buys BlackRock ETFs here. And now they basically have the BlackRock ETFs and they're stored at Coinbase, for example. So in the USA. But if China were to say, there are geopolitical issues, then China could say, Larry Fink, you've managed my... China could say, Larry Fink, I want to sell using in-kind. Hey, Larry Fink, I want to use the in-kind option to sell my ETFs. I want Bitcoin sent directly to my hardware wallet. But I want to use the in-kind option now, and I want to sell my ETFs. But I don't want cash for that. I want the Bitcoin paid directly to my hardware wallet, straight to my Bitcoin address. And then China could actually cash out the Bitcoin in real physical Bitcoin at any time. It shouldn't have to go through the dollar, because then China would have to go through the Bitcoin ETFs in dollars. So you might have to exchange the dollars for another currency. And from your own currency, you'd have to buy Bitcoin again. That's obviously a lot more complicated. So if you're a really big player here, it's really, really important to have the ability to act here. And this ability to act is now provided by the in-kind option here. That means especially if you're a big country and you want to buy Bitcoin. So now there's the option with the Bitcoin ETFs, which is way more attractive. They held back because it wasn't that attractive. With, let's say, pension funds and stuff, it's pretty similar. But there are more advantages. Because just imagine, if we only have in-kind ETFs now, that also means the risk for paper Bitcoin goes down. So there have always been suspicions about that. Okay, so are the BlackRock Bitcoin ETFs backed? Or not? Whatever. And if you always do all of this in cash, is the likelihood here that you have paper Bitcoin here definitely higher than if you do it in kind? So that's definitely the next advantage here, that we basically have less risk. Also less fat, where people can say, yeah, all these Bitcoin ETFs are just paper Bitcoin. So paper Bitcoin means that you're just issuing more Bitcoin than what's actually physically backed. And of course, if you can also withdraw this physically, that's definitely a plus here. BlackRock or the Bitcoin issuer is much more responsible because much easier. A bank run can happen. And if a bank run can happen more easily, then the institution has to be much better prepared here. Although I don't want to say now that somehow BlackRock is at risk here and is massively issuing paper Bitcoin or something like that. Then the next factor, of course, is that the fees will be significantly lower here. For BlackRock, the costs are basically lower because there's just one less intermediary step. That will, of course, be passed on to the in-kind later. That means the costs of holding Bitcoin with a Bitcoin ETF will be even lower. That means even more attractive conditions, which means even more purchases and ultimately higher Bitcoin prices. And then that definitely strengthens the supply-demand dynamics of Bitcoin, and we can see that Wall Street is really learning here right now. So Wall Street is learning that when it comes to Bitcoin, it's all about not your keys, not your coins. And the more you trade directly with Bitcoin spot, the more you're respected in the Bitcoin community. And Wall Street is currently learning that in the Bitcoin scene, you don't want paper notes, but that you'd rather be trading with real spot Bitcoin. And this is mainly happening with the in-kind ETFs. And that is ultimately a big price driver. But I have to say, a lot of people misunderstand it. For example, when I say here, this is a mega catalyst or something like that, doesn't mean if it happens, Bitcoin rises soon. These are long-term price drivers, that Bitcoin is going to shoot up massively the very next day. Rather, these are all long-term price drivers. You need to understand, just like with the strategic Bitcoin reserve or with the regulation, the Z121 regulation, which is now being improved, or all the things that are happening right now, that the SEC is restructuring, that there's a crypto team. Here in the USA, they're basically evaluating whether there will be a reserve, and so on. These are all massively long-term, positive price drivers. But that doesn't mean that tomorrow the Bitcoin price will reach 300,000. US dollar goes up. Instead, we have a whole bunch of little building blocks. That's also what American HODL meant at the beginning, where he meant, hey, it's crazy how much is happening all at once, right? And yesterday, I actually even mentioned in a video, because I had David Sachs is quoted here in the interview, where he basically said, hey, if Donald Trump takes the reins here, then things around the crypto and Bitcoin scene can escalate really quickly. Then the regulation can be switched up really quickly. And we're really seeing that things are happening one after another very quickly. And that was the bullish side. Now we need to take a look. What else is going on here at Wall Street? Because Wall Street is opening up to Bitcoin. But there are always people from Wall Street who are really going after Bitcoin. And actually, we see here Wall Bloomberg, who is now actually sharing an article, publishing an article. And of course, there's a massive Wall Street buckle, or I don't know what to call it, just a classic fiat investor who, let's say, comes from the traditional Wall Street world and so on. And he's actually saying that MicroStrategy suddenly has a tax problem and needs help from Trump's IRS. And he says here, as you can see, after MicroStrategy has been raising money for years through stock and bond issuances to buy Bitcoin, the company has a stash worth about $47 billion US dollars. That includes $18 billion US dollars in unrealized gains. MicroStrategy may owe tax on book gains without selling Bitcoin. They have to pay federal income tax, even if they've never sold a single Bitcoin. According to a new disclosure from MicroStrategy this month, which went largely unnoticed. The tax bill could amount to millions of dollars starting next year. This is definitely a total shocker. So could it really be the case that MicroStrategy has to pay taxes on unrealized gains? So you really have to picture this. That's always the dream of all socialists that you can basically hear. Taxing unrealized gains. So normally it's like this: you sell a stock, for example, and then you've made a profit and you only pay taxes on that profit. So you don't tax, let's say, the capital itself, but only the profits you make from a stock or an investment, a property, or Bitcoin, and so on. While Bloomberg reports MicroStrategy faces taxation on profits, that MicroStrategy has made so many profits and now is basically coming up against taxation, that they basically have to pay taxes on the unrealized gains, and that then leads to that MicroStrategy, that Michael Saylor has to sell his Bitcoin app. But there was a lot of resistance to this, and rightly so. Like, for example, here from Preston Pitch, who just says, oh, well, hey, I'm laughing here. Are you talking about how Wall Street uses traditional media as a weapon to get a better entry price for MicroStrategy? Next up is Jim Cramer here. So Preston Pitch downplays the whole thing, saying, of course, this is all bullshit. It's really just about this: to spread massive FUD from Wall Street, to create panic here, to see cheaper entry prices here. And we've really seen that happen quite a few times already. Here in the Bitcoin space, Wall Street obviously always wants lower entry prices. And not just with Bitcoin, Wall Street has been doing this for years. Jim Cramer is basically just full-time spreading FUD to scare investors, to spread panic. So that, of course, ends up on TV somehow. Yeah, now this and that is happening. And most of the time, what Jim Cramer says happens exactly the opposite. That's just a classic contrarian indicator. And Preston Pitch feels pretty much the same way about the take that's being presented here, as if MicroStrategy now has to pay unrealized gains. I mean, I'm not really well-versed in tax law here or anything, or actually not at all, in America. But it wouldn't even cross my mind why MicroStrategy should pay unrealized gains now and why, for example, other companies wouldn't have to. Besides, if they introduce unrealized gains tax or something like that, then probably no company would want to be in the USA anymore because they have their headquarters in the USA. Then everyone would probably just bail. So that's probably about as classic a taxation system as you can imagine. Unrealized gains tax. If they add something like that, all the rich people will leave. Then all the companies would just move to another country and so on. And above all, that would have somehow become public, or something like that. It can't be that Wall Street says, hey, unrealized gains mean taxes. Hey, okay, now there are unrealized gains or something, and now they all have to pay taxes on unrealized gains, or something like that. That would have definitely popped up way earlier. Like I said, I'm not a Wall Street guy. I can't give you any specific tips or anything like that. Or I don't know the tax background and all that. But we definitely need to be careful here, because those are what you call fat campaigns. Here they're just spreading false information. The idea here is to create panic, to drive the prices down, to buy cheaply. So Wall Bloomberg, he's probably not even a classic Bitcoin opponent, because there are really classic Bitcoin opponents, probably like a Peter Schiff, who actually has a real problem with it. MIT, Bitcoin is just driven by his ego or something. MIT, Bitcoin is just driven by his ego or something. But then there's the other category that actually doesn't have a problem with Bitcoin. Jim Cramer probably falls into that category too. But people just want to buy as cheaply as possible. And that's why they're trying to unsettle the market and then use that uncertainty to buy cheaply here again. And if you really want to track your taxes optimally, if you want an absolutely perfect tax tool, or perfect, no, but a really, really awesome tax tool that you can use yourself, then I definitely recommend coin tracking to you. I'll put a link down below for you. There's also a discount with the code TCOTEL if you sign up for a pro account here, because you can easily track your taxes. You can also do portfolio analysis here. You can track the portfolio there. It's also highly recommended, so that you have an overview. You know which coins are tax-free and which ones aren't yet. So feel free to check out the link down below. Use 21 Bitcoin to buy Bitcoin. 21 Bitcoin, where you can easily, safely, and simply buy Bitcoin. The easiest way to buy Bitcoin in Europe. Massive what's happening here right now. Things are really moving fast. Let me know what you think about it. See you later. Peace out.